Hello, hello. Gosh, I've had some issues starting this live stream. I hope everyone's okay and you can hear me okay. And I'm just going to share the links around with people and then we can get going. And thank you very much for joining me. So I'm just going to pop this on and we can get going. I'm a little bit late because we had a wild thunderstorm, and which would be all right, like it's just a bit of thunder. But I've got a 160-pound dog, and he is terrified of thunder. So whenever that kicks off, he gets in my lap, and it kind of disrupts everything. So better be doing that without him. Okay, just one more link to send out and then we are good to go. Been such a while, I'm out of practice. I'll get better. Okay, where shall we start? One of the most exciting things, not exciting, this is really one of the biggest weeks in terms of news, financial news of the year. We've got the Federal Reserve on Wednesday, we've got the ECB on Thursday, and we've got the Bank of Japan on Friday. The only one really, for sure going to hike is the ECB on Thursday. They're a bit behind, they're still only at 3.5%. Everyone's going to be watching the Bank of Japan closely, obviously, because it's a new governor and he's had enough time now. If he is going to change monetary policy, this is where we are going to see it. So hi Stephen UK, yeah, it's been ages. So ages. So the good news is that while we have been selling off really, having a bit of a pullback in crypto, we've had a really interesting breakout here in US stock indexes. Breaking above resistance, I think we've got more upside to come unless, we start filling some gaps. So, the more people predict the high is in or this is a blow off top, the higher it tends to go. That's kind of my theory of stock indexes. And I do believe that we have got room to go a lot higher. But if we are going to see a reversal, it would be this week. Now, in terms of the dollar and other markets, what I think we are seeing here is a way forward. So this is a 4-hour chart of the dollar index. And if I look at the low in mid-April, I think we've kind of got a nice rally, a 3-wave correction, a big rally, which I think is probably a wave 3. But as you know, Elliott wave isn't my first love. But because this is 1.618 or 2.618, the length of this first one, I think we're in a wave 4 and we've got one more push higher. And if I zoom out to the daily, sorry about the thunder, I'll take a look at Chainlink. Hi. If we take a look here, most corrections for me, the really simple, nice, easy corrections are when we make 3 equal measured moves. We've got a double bottom here. Whenever you get a double bottom, your target is really the high or the M in the middle or the low if you get a double top. So this is our target up here, back up to the 200 days. So I think in the dollar we've gone 1, 2, 3. We're going to do another one and then one more push higher, which means one more push lower in the euro dollar, which is 57% of the dollar index. So in currencies, everything is pretty much going sideways. So nice 3-wave correction. I still think that this dollar index potentially goes a little bit lower to this swing low. And this should be that would normally be bullish for Bitcoin. However, so there's only a couple of charts that I think are really interesting going the other way. So I like the consolidation in gold. If we're going to do an ABC, for example, 3-wave correction lower in the dollar, we should see a 3-wave correction higher here following this trend reversal in gold. In gold, we've got 5 waves down. We broke this previous swing low, which if we were going to trend higher would be the support. And we've got a reversal of our daily moving averages, the 20 and 50. So for gold, I would expect here a 1, 2, 3, and then another swing lower. That's how I'm looking at gold. But for now, looks pretty sideways consolidation, just like most currencies. This is the week, though, with the Fed and so much happening, that it could all change. The Fed has said that they are most like that they are considering pausing this month. Pausing is not reversing. It doesn't mean they're going to stop rate hikes. And I think that they shouldn't really have warned that, because it kind of ties them to it. And the day before, so tomorrow, the day before the Fed on Wednesday, we have got US CPI inflation data. And if that comes in really hot or hotter than they're expecting, what are they going to do? They're either going to have to surprise hike, and we're still expecting another hike, and the market doesn't like surprises, or they're going to pause and have to warn that they're going to hike later. You know, it's, yeah, I kind of think that they shouldn't have tied their hands like that. It should be more data dependent. Maybe the market is, you know, over-egging the pause or the prediction of a pause. But certainly that's how the market is pricing it for Wednesday. And it will all be about the CPI inflation data tomorrow. So that's how I see other markets. I'm going to leave them for now though and talk about Bitcoin. Now, let's look at this on a weekly. So we had this I'm going to tidy up my chart here. We had this lovely strong rally off the low that we made in November. And you can see when you're in a nice rally, your pullbacks don't overlap the previous swing if you're trending. So for me, we're still trending. We made a very nice kind of, didn't come more than halfway back here and continued higher. And here, you know, when you are in a trend, you see a consolidation, another swing, consolidation. And when you're in a trend, these two swings don't bleed into each other. And that's kind of what we're seeing here pretty nicely in Bitcoin. I'm looking at futures because these futures have been much better technically than spot lately. And I'm also watching this weekly 200 moving average, which this is the 200 moving average that at the moment, for the start of this week, we are underneath this 200 moving average and holding underneath it. And this does point to perhaps we go a little bit lower in this descending channel. So whether you know Elliott wave or not, for now, the fact that we've had this big strong rally and we've got this choppy overlapping, really hard to trade sideways correction says to me that this is just a correction. All of our weekly moving averages are bullish, and we're going to find at some point some support and continue higher again. So this is all about how far back are we gonna come. And when we look at this in this channel on the daily, here we have got a bearish cross to our daily moving averages. Normally I would look at this and say, well, you know, back to the 200 moving average. That is normally what happens. Sometimes though, instead of coming back to those moving averages, what you do is instead you trade sideways until the moving averages catch up, which, yeah, that's not a happy move. I'm just going to find a document because let's take a look at the seasonal patterns for Bitcoin, because it does tend to have, like a lot of markets, have a bit of a summer lull. I bet I can't find it now I'm talking about it, but I should have got it ready. So Bitcoin does tend to kind of go sideways into September, October, and then have a really kind of strong end of year rally. So this is a really good time to preserve your capital. Don't keep trying to buy every dip and get run over, and get ready for the summer to be over and us to go up again for the next leg higher in Bitcoin. And if I take my fibs all the way from, so the bearish argument is that this is just a three-wave correction and Bitcoin is headed down to new lows, and we're going to go, you know, underneath 15,000 to 12,000, or I don't know how much lower. The bullish argument is that this was our really nice first swing. Here was our 50% pullback. So we've done our wave one, and this is just wave one of three. So we're in like 1, 2, 3, and the next swing up will be that, you know, wave 3 of 3 that they talk about in Elliott wave, which would be really strong. That would be absolutely epic if that happens in September. It does look like 24,000, doesn't it? If we were, if we would just look at simple support and resistance in this neckline here, and we go left, we haven't got to go much lower to 25,000. But sometimes, when a level like this, it's almost too obvious, isn't it? Also, if we were to measure the first swing lower, so often wave 1 and wave 5 are equal, even in a declining wedge or a triangle or whatever like this. So if this is our first swing and we projected him here for the 5th wave, 24,445, and yeah, it does often overshoot. And so yeah, I wouldn't be surprised at all if that's where we get up. But for me, short term, I'm looking at where we are and this chop that we're in, because I do think that within this channel that we're in, there is an argument that this really strong rally, so this really strong rally in Bitcoin, everyone was surprised. I watched the CEO of Coinbase on TV saying he was surprised by the Bitcoin rally. I think that there are a lot of people that had money in coins on exchanges that didn't do the KYC, that instead of being able to convert their money into dollars or Tether or whatever and take it out that way, instead went from shit coins or altcoins to Bitcoin. And I think that there was a lot of selling in ETH as well. We're back to ETH underperforming Bitcoin again. And I wonder whether this wasn't people moving from altcoins after the lawsuits were announced, and that was into Bitcoin, and that's what the big rally was. And so they moved it into Bitcoin and then used the Bitcoin to move off exchanges. So Harshad thinks as long as the 20,000 stays intact, you're not going to worry too much. I'm going to say I'd like to see, here's the problem. Even if this is like wave 1, 2, and this is 1 of 3, we could very easily come back, 786, 886, any one of these, couldn't we? So I'm not gonna, as long as, to be honest, technically, as long as we stay above 19,200, that theory could still be correct. We could actually come quite a long way back here. But let's go back to the theory that instead of doing a big pullback, we just go sideways and chop everybody up. And if that's the case, so let's just look short term, because at what this huge rally off the lows that we had last week after the Coinbase announcement, and it looks to me like we've done 3 waves back. Also, I use fibs, so I'm going to go short term from this level to level. I'm going to take all the other fibs away. I'm just saying that I wouldn't be surprised short term if we had another big rally here. This is a 4-hour chart. And these fibs from this low to high are working very nicely. And we are holding support of the 786, which for me is kind of the last one. If we get underneath this, we're likely to retest the lows and that 25,000 level. And we'll do one of those Bitcoin bottoms. So this was a Bitcoin bottom. So it makes the low and then it makes a slightly lower low and runs the stops. Whenever you see that, that's such a good sign, isn't it? That swing failure pattern is such a good sign of a top and a bottom. Here, we made a low, retested it, massive spike, closed back above. That's such a typical. Here, high, slightly higher high, and that was a reversal. High, slightly higher high, and that was the reversal. A low, slightly lower low that didn't close below. And so we see that a lot in crypto. So if we get really volatile this week, if we continue lower, and we did that down here, and we made, a slightly lower low and sharp rally close back above, and there's a ton of buyers waiting at 25,000, that would be a quite interesting level to put your toe in the water and have a little go. See, don't use a ton of leverage. Don't stay in if the trade doesn't work and it continues lower. But I do think it's a good price to have a go. But for me, short term, okay, I use fib retrace levels for risk management. So I look at them like staircases, and you go level to level, and if they break, then, I use them for risk management. I get out. So here, if we were to close underneath this 6786 fib level, we're still going down. If I had a long position, I'm waiting to buy some, but if this continues lower, that's what I'm going to be looking for. If this level is going to hold, and if it doesn't, we are going to go lower. Maybe we do go to that 20,000 level. But for now, this looks like a really strong rally and a three-wave correction. Back to a 786, quite a nice little setup. Are the swings equal? Well, here in the futures, they kind of are, aren't they? Not quite, but pretty close. So, we have got a sharp rally, potential trend reversal, followed by a three-wave correction where we could bounce from. Now, the only way, and this is how I use these fib levels, that we are bouncing, is if we were to close above this 61.8. So that's 26,160. It's the same price, except it's the 38.2 in spot future. So we'll look at that in a minute. If we close above 26,160, I think that we are headed up to the top of this kind of trend line. We'll see if we break out. Up here, we're headed back to 26,680, and above that, I think we're going higher. If I look at the spot prices, they're very similar prices. It's different fib level. So here in Bitcoin futures, because we traded all weekend and it got quite leery, we've had this sharp rally, three-wave correction. Do the swings look roughly the same size? They kind of are, yes. Here's our first swing. Here's our second swing. It's a little bit messy, but we are kind of holding this level. And if we go from high to low, we're above this. Here's our resistance level. At the moment, this looks like a bear flag, and it does look like we could do another swing lower, and it does look like we could retest that 25,000 level with 5 waves down, doesn't it? That would then be, instead of a nice ABC, that would be like this. And then I would be looking for if the SEC pauses this month, how does it affect Bitcoin? Bitcoin, is really, really sensitive to liquidity in the financial markets. When there's lots of money sloshing around, Bitcoin does really, really well. I think a bigger effect on that has been the shutting down in the US of the banks, where people could easily transact between Bitcoin and crypto and the US dollar. And I think it's going to take some time for that to come back again, or that to be set up in other countries. But it's not all bad, for liquidity for crypto. Since the beginning of June, they have allowed retail trading in cryptocurrency in Hong Kong again. It's been years, and Sam Bankman-Fried started his fortune, and Alameda Trading, I know he's an idiot and I lost a lot of money with him, but it used to be that there was massive liquidity in Hong Kong, and I really do think it's going to take a while for some exchanges to get going there, but I really do think that is going to make Asian trading, particularly, we're all going to be staying up at night, because I think Asian trading could get really interesting again in cryptocurrency. So I'm quite excited. It's not all bad for crypto. Okay, so this looks like a bear flag, clearly if it breaks down. So this basically is our sideways range. If we break down, I'm looking for a retest of 25,000 and one of those crypto bottoms where we take out these lows and bounce pretty sharply. But if we can break above 26,170 here, these lows and highs, I think that we are in a bigger three-wave bounce to the top of this trading range. So that would mean for here, this is our first swing higher, three-wave correction, next swing higher. And we should see a slightly higher high, 27,500 or something like that. Do I use cross crypto analysis? Yes, I do. But BTC and stuff, and I look at Bitcoin dominance, I think that though, with the explosion in stable coins, the Bitcoin dominance, it used to be you were either in an alt or you were in Bitcoin, and you traded between the two, and that's how you increased your position. And we didn't care about stable coins and stuff. I think that stable coins have reduced the effectiveness of that. And I think that the big trading firms, that were able to trade on Binance and Coinbase and FTX through the American banks, they were quite a big driver of that cross-market, cross-crypto movement. So if one moved, they would put trades on in all of the others. So for example, my biggest, I suppose, cross-asset thing that I'm watching at the moment is the Ripple lawsuit. So that's where we are with Bitcoin. We are sideways. We are still in a choppy, overlapping correction that we have been in from the highs. We could continue in this for another month of chopping sideways, but I do still see this as a correction, as a pullback to our moving averages, and I think end of summer we should have a really nice another swing higher, if not before then. So I'm watching it for a bottom. One of the ones that have done not as well as Bitcoin is ETH, and the reason for that, not only have there been a lot of whales selling ETH. So I measured ETH. I used this tool here, trend-based fib extension here. It's called trend-based fib extension, and I adapted it for the colors that I like. So basically, it measures for me this low to high, and I project it from here. And the 61.8 is always a level, and the equal measured move is always a level. I had been looking for this 61.8 to hold and another swing higher in ETH, and then all this hell kicked off. The SEC clearly do not like staking, and quite a lot of big hedge funds and firms like staking. They like earning money in crypto. My old hedge fund boss, he thinks people who take directional trades are mad gamblers, and he is really interested in earning a yield or earning interest. And he got into crypto because he could do that. Now, of course, that's all become very difficult, and the staking and the earning has, that game is pretty much over. That's going to take a lot of liquidity out that we need to see come back, I think, from Hong Kong and Asia. That's what I'm hoping for. Anyway, ETH was the biggest game for staking, wasn't it? And so big money taking out of ETH now that that's going away. That is potentially a little bit, thank you, Harsha, thank you. So end of staking is likely to be a little bit of a negative for ETH. But I think at the moment, right, the SEC have said that ETH probably isn't a security because it's been around for quite a long time. But if Ripple loses the lawsuit, that's going to hit ETH really hard. So, if we hear that they've lost, it's going to be too late to sell Ripple. There will be no trade there. But I think that we could potentially sell ETH. And when I zoom out and look at this weekly here, it looks pretty good that we're holding these moving averages. But really, it looks to me like we're just trading sideways back and forward through these moving averages. And if we think, so for me, if we think that this is just a three-wave correction, the most common retrace for me, I'm going to put regular candles on here, the most common retrace of a three-wave correction like this, if you lose the 236, is 786, which would be, gosh, all the way back here to 1150. Windows says 4.7 yield on ETH at the moment at Coinbase. It's pretty good. That's really good, isn't it? That's almost as good as treasuries, but it's not quite as good as treasuries. And so if you were a hedge fund and you think, gosh, should I earn 4.7 yield on ETH, or should I just buy some super safe treasuries? They're probably going to go to treasuries. And I think one of the things that's going to hurt ETH, okay, so from the start of this year, because of the debt ceiling, the US government couldn't issue any new treasuries from January. And they were running down their current account at the Fed. And now that that is over and a deal is done, this summer they're going to sell 5 times as many treasuries as normal. So if you were a hedge fund with a whole bunch of money, you're going to say to yourself, well, I could put it in cryptocurrency and earn 4.7%. Well, that's pretty risky. I could put it in a money market fund, which is less risky, but it's not without counterparty risk. And money, because if you buy a treasury through a money market fund, then the money market fund takes a percentage of the interest and gives you a percentage, but there's also a risk if something happens to that fund. The safest way is to buy treasuries directly, and with 5 times as many treasuries to sell this summer, we could see a lot of liquidity being taken out of stuff like ETH, where you can earn interest, and potentially back into treasuries. And so we need to watch out for that. That short term at least could hurt ETH. So I know I hate being the bearer of bad news. I do hate being the bearer of bad news. So now, do I think that the US government would succeed in proving ETH as a security? I think it would be really, really hard, and they've got to win against Ripple first, and they haven't managed to do that yet. So I don't think that's a done deal. But as I said, looking at Bitcoin, there are a few charts where, whenever I see a really nice looking 3-wave correction back to an interesting fib level, which is what I'm seeing short term in some of these cryptos, and particularly Bitcoin, then I think that there is a potential for a bigger move up. And so here in Bitcoin, above 26,160, I think we could see a bigger move. I don't like it so much in ETH. I think that ETH is likely to underperform. Now, there are a few altcoins that were named in the lawsuit as securities, which have got pretty similar patterns, bigger scale. So for example, let's take a look at MATIC. Now here is MATIC, pretty interesting fib level, big 786. If I zoom out here, highs to lows, so I've got my fibs all-time low to highs, and I look at them like a staircase. So for me, when you reverse at a 786 and you get an 886, an 886 fib, so a 786 is a square root of 61.8, and the 886 is the square root of the 786. So that's how I calculate these, right? Whenever you get above the 786, your target is the 50%. That's where we reverse. Very nice 3-wave rally here. 3-wave rally for me, as I said earlier, most common retrace is a 786 fib. So for MATIC, if I go from this low to high, I'm going to look for this 786 fib to hold, which is 0.58. It's holding very nicely, isn't it? Also, I like to see 3-wave equal measured move corrections. And when I look at this drop, so if I measure my first swing here, low to high, just do it really simply, high to low, you can see that brings us back here. So that gives us a really important potential correction level for MATIC to rally, potentially. Now, MATIC, so as I said before, when you get above the previous fib, then that tells you you've got a reversal and you've got a bigger bounce underway. So first off, if we find a bottoming pattern here this week on a lower time frame in MATIC, then our first target is going to be back to the 61.8, which is at 0.794. And if we close above that, then here's the proper meat in the trade, and the meat in the sandwich is between this level and this level, 0.79 and 1.08. And this is just a bounce and a downtrend if we get it in MATIC after being kind of oversold. So that's what I'm looking at. Now it's crypto, we need to wait for the retest, we need to wait for lower high, see if it holds on a retest, something like that. So as you know, the key level for me on the daily is going to be 0.583, and that's what I'm looking for, a bounce from 0.583 if it holds, and 0.79. And remember, we're just talking about an oversold bounce in MATIC because it's had some pretty bad news, and we'll see. And there's a few of these potential equal measured move setups out there that I've seen happen. So I'm just gonna find my list. So Doge, I know, I can't even believe I'm saying Doge. I'm looking at Chiliz as well, but quite a few of these patterns. Maker is one. Let's do Doge here. Now Doge is a measure of Elon Musk's attention, nothing else. It's a meme coin, so we're not going to bet the farm on it. We're not going to bet it going up on forever. But as long as, you know, it has his attention, it's quite an interesting trade, isn't it? So I'm going to go through a weekly here. For quite some time, I've been looking at these fib levels in Dogecoin. We didn't manage to hold the 786, and here we are. But you can see in this fib swing from this high to low, here we go. This was the level I was waiting for, 0.615. Short term, some people, I don't want to excite people too much. I just think that there is the potential. Now, you know, if everything rallies, if Elon does, I know. I don't actually think that we've got a setup in Doge here yet. But it is at a level where I'm watching for a bottom, and if it did, I would look for back to the previous swing highs, back to the daily 50 moving average at 0.0725, and then above that, yeah, I think we could see a much bigger swing. There's a few of them. Doge isn't my favorite on the list though. Let's take a look at another one that's done a pretty decent ABC or three-wave correction, and that's Ada. So here's a daily chart of Ada. Looks very similar to the nasty drop in Doge. Here's our 886 fib level. We've paused at it for the last 2 days. It's at 0.2646. We've actually retested the lows with a swing failure pattern, haven't we? But couldn't close underneath it. Are we going to turn this into a bigger bounce? Well, you know, if you reverse an 886 above this 786, yes, we will. And that is at 0.2869. So first off, that's our short term. If you're short term trading, that's your upside target. And above 0.2869, our target is the 50% retrace. So at the moment, this is just sideways consolidation. It's a really big news week. I don't know which way we're going to go with this, but that's what I'm looking at. But because this is, I use these fibs again for risk management. It tells me which way the trend is, or it's a really good measure for counter trend bounces because I really like moving averages for the trend. So I know that if we close above 0.286, we will bounce back to this daily 200 moving average and the 50% at 0.35. That's my first target if we close above here. And my second target would be this 236 fib up here at 0.409 if we go beyond that. Okay, and then that's what I'm looking for in Ada. Now we stay in the downtrend underneath it. Cardano is getting pretty, you know, this is just one of those buy when there's blood in the street trades. This is clearly a nasty downtrend and we are at the lows. So please don't do this with a ton of leverage because I said it's going to go up. I didn't. I said that this is what I'm looking for, and if it does, it's a bounce. We don't want to get married to it. We're not going to hold it forever. We're just going to look at these two targets. Okay, that's it. We're going to be cold about it. But Ada above 0.2869 could see a much bigger bounce back to the 200-day moving average. BNB, I can't believe I'm even saying BNB. BNB, you know, is it's just a, you know, if we say that Doge is a measure of how we feel about Elon Musk or his attention, then BNB really is a measure of finance, isn't it? Quite an interesting level though. It's the weekly 200 moving average. First time it's even said hello to it and tagged it. So that's quite interesting. Also, if I measure from I'll do Ripple next, and I will look at Algorand as well. So, you know, when I measure a swing, so I measure from this high to this low. So here we've gone 3 waves up. We're making very nice 3-wave correction moves here, aren't we? So we've gone 3 waves up, 3 waves down, 3 waves up. It's not, we're not trending anyway. We're in a big sideways correction here. We're underneath this 236, this 61.8 level at 239 out on the 200-day. If we're going to bounce, that level is now resistance, and that's what we need to recover if we're going higher. At the moment, we're hanging underneath it, so clearly we're still going down. One of the patterns markets tend to make if they overshoot a level is inverted head and shoulders patterns. Now, I probably wouldn't buy, I'm not going to buy BNB, but if you had a pile and you wanted to get out of it, holding back above this 240 level would show some pretty nice strength and a pretty decent bounce, and potentially back to the top of this sideways wedge that we are in. We're coiling up. If we hold underneath 240 though, we are likely to continue lower, unfortunately, to 171 and I think potentially 148 for BNB. So this is not a buy, I do think, but if it recovered 240 and could hold above 240, BNB would be going up again. Okay, let's take a look at everyone's favorite lottery ticket, which is Ripple. Okay, I say lottery ticket because really we're betting on the outcome of a lawsuit, you know, and the SEC, you know, don't tend to usually win in court. It's no better than 50-50 the chances of them winning. The SEC get most of their results by persuading people to settle for pretty unfair terms. So we're really in a sideways triangle here in Ripple. The thing is, we've got flat moving averages and we've really got no trend. But if I've got this wrong about this being a big sideways thing here, what I kind of think maybe, you know, is, you see, normally if we were holding above a 200 moving average like this, I would be like, wow, this is really bullish, we're going up, everything looks great. But it's flat, and when you've got moving averages flat, you haven't got that, you've got a sideways range. And we have got a sideways range here in Ripple. But if we were to break these highs, a lot of people would jump on it. Here's the thing, we're not insiders. We don't know what's going on. We're not lawyers negotiating, or we don't know what's going on in court. The only thing we can do is watch for what the insiders are doing. And if they all start betting on Ripple and buying it, they must know something. And, you know, it wouldn't be a terrible trade then, would it? So that's really how I'm seeing this. If we break out of this sideways range. Now, if it's a false breakout, it will be just because it's an ABC. So let's take that away and we'll measure. So if we measure this first swing from the low, go from the slow here. Our equal measured move level is 0.57. That's where we found resistance. So above 0.57, we're going to look for 0.645. And then we're going to look for the 1.618 of this first swing, which is 0.738 next. So those are the levels I'm looking for. It does look, yeah, pretty squeezy. Maybe people think, you know, it wasn't that long ago that they said that it was about an hour. I think it's the beginning of July that they thought we would have a determination. But yeah, really this is just a lottery ticket. Now an Elliott wave short term would probably look at this and go, looks like a nice 3-wave correction, consolidation, we're holding the moving averages. It does look like it's bunching up to go higher again. I don't think it's quite ready, but I don't think it's a terrible idea to have a little, but it's mad money, you know. No, they didn't settle. No, they're fighting them in court. If Ripple lose, I think Ripple must have, like, if Ripple lose, it will be very bad news for altcoins and ETH. Because they could go after ETH next. Let's see. That's all I'm saying. Okay, let's take a look at a few. I keep watching this Chiliz. Okay, so Chiliz is another one. Whenever I see a inverted head and shoulders pattern like this, I get excited. I think it looks really good. I like the bullish cross of the weekly moving averages here in Chiliz. I like how we've got a huge spike bounce off the lows in this one. I think that Chiliz is a pretty interesting one to look at going higher. It looks like, you know, the bullish argument is it's a big weekly bottoming pattern. Short term, we've got one of those broadening wedge things going on, haven't we? So here, like this, and we're in the middle. So don't, you know, diddling in the middle is very hard unless you have a really good level. So for me, the really good level has to be, you know, this 786 fib here in the middle that we're bouncing from and holding above. And I'm just going to put the 50% in because that's going to be our target up here, 0.49. So, you know, after a really big move that's got us potentially above this mid-level, I'd like to see us buy pullbacks that hold this mid-level and turn higher from here. It's not doing it quite yet. We've got a really nasty week. But yeah, Chiliz, I don't think is a terrible idea. And I think that the target, because of this fib pattern that we're making, is all the way up at 0.495. So the chart's not complete. Oh, have I got the wrong chart? Oh, damn. I've been looking at it. Okay, forget that. Let's look at Algorand. Dullard. I didn't update that. So let me see. What about Algo? Okay, now whenever... So people who don't know any technical analysis, whenever you get to previous highs and lows, that's often where you see profit taking or interest. And so here we are retesting previous all-time lows in Algo against the US dollar. When we look at it on the daily, have we got a bullish reversal here yet? No, we really haven't. We've got a little bit of a tail on a candle. So that for me is not enough to be a bounce, unfortunately. Now, it's what I want to see, and it's a little bit of a swing failure. We're underneath, but you know, here we are. Look, so when I'm looking for a reversal, okay, so I look at these hourly moving averages. So first off, we have to flip them, then we have to pull back to get support from them, and then we have to rally away to make a new high. So here, for example, to make a new high when we were doing this, we failed on that third step. We didn't break out and make a new high. There's that high. Now we're doing the same thing, aren't we? Got a little bit of a sideways thing going on. If we break these highs, where are we likely to go to? Back to these swing highs and back to this hourly moving average. We have flipped these hourly short-term moving averages bullish. I would look for a three-wave pullback and then to see if we can break the highs. So the bullish thing would be 1, 2, 3, and then break above this high. That would be an interesting long back to the 200 moving average. The 200 moving average on any time frame is the king of the chart. If you are trading counter trend, when you get a trend reversal, your first target is always back to that 200 moving average. And when you are in a downtrend, you know, getting in as close to the 200 moving average as you can is kind of your determinant of trend. So here, when we look at it on the 4 hour, that 200 moving average is our trend. And here, when we had a bullish cross of the daily moving averages, our target was back to the daily 200 with our counter trend bounce. That's how it tends to work. So short term, if we were looking for a trend reversal, whilst we're underneath that hourly 200 moving average, we would just be looking for bounces back to that 200 moving average. And so, yeah, it's really interesting that we're back retesting the previous lows, but it's just not enough for a reversal. Okay, Tron. God, what is going on with Tron? You're right, it's been really, really outperforming, and I scratch my head as to why. Let's take a look at TRX. And quite a nasty pullback that last week though. Now, this on the weekly is weekly moving averages. Really nice setup for more upside. Bounce from the weekly, newly minted weekly 200 moving average. A really nice get above the weekly moving averages. Now we're pulling back to test them for support. The problem I have with this, and so the one that I always look for as a warning, is when I have like equal measured moves. So if we look at it on the weekly, we're just looking at these two swings, and if they are equal, it's a little bit of a warning, and they look like they were. So this 61.8 level at 0.072 becomes important support and resistance. If we were to get back above it, I would think we would get a bigger bounce. It's also my daily 50 moving average. That's a big deal, support and resistance as well. And so unfortunately, this looks to me like a correction, and it hit our first corrective target. So although TRX was really bouncy and performing really well, we could see a bigger pullback, because normally, you know, if you get a three-wave move like that and you get under the bigger moving averages and underneath that 61.8 level, you quite often get a 618, you know, a 786 retrace. So from this low to this high, it would be all the way back to here. So I'm hoping I'm wrong. I'm hoping we hold these moving averages. I'm hoping we hold this because it's a 50% of this big swing. And so again, that daily 50 moving average, if we can get back above it, that would be quite bullish. That's at 0.0723. And then, because this was a 50% retrace, we're going to look for 50%. Markets that that do kind of mean reversion can tend to keep doing it. So if I go from this low to high like this, line it up, you'll see that this was a 50% here. So we're going to look for 50% going the other way on the upside. I didn't quite get it down. Look. There we go. Look. There, 50% at 0.065. So we're looking for a bounce 50%. It calls up and then 50% pullback, and so on and so on. Not doing very well here. 0.075 would be a 50% bounce. So first target upside to get above is that daily 50 moving average. Second target is 0.075. We'll see if we can do that. And then, you know, if we go beyond that, then we can talk about buying pullbacks and maybe more, you know, more. But short-term trades at the moment, whilst we're in this summer consolidation sideways, you know, we really should be trading level to level. I love, love, love Heikin-Ashi candles. I mark my levels. Heikin-Ashi is a moving average on a candle. Like, it's so simple, red to green, and it's really good. So the CCI is a commodity channel index. That's basically a moving average, and 14 or a 21 I use on the daily. And so I use it. I'm going to publish a video. I'm going to be doing a lot more on Twitter. I don't know. Hope you follow me on Twitter. I have some big plans for Twitter. It'll be announced this week. I was hoping it would be ready for tonight, but it wasn't. Okay, so I will see you all next week. Thank you very much for joining me. I will be doing some more before next week. Let's see what happens on Wednesday. So the really important thing is 1 hour before the US Open tomorrow is CPI. Okay, that's the last thing that the Fed are going to see before they vote on what to do next. And it will tell us whether inflation is running hot or not. Okay, so the CPI is forecast for the US is forecast to come in at 0.2. Previous month was 0.4, month on month, that is. And we will see. Year on year, it's still, it's forecast to come down from 4.9 to 4.1. If it doesn't and it's still running hot, it will be really hard for the Fed to pause. And if they hike rates, then, no matter what, the market is going to be pricing in them, and it'll be a big move. The ECB on Thursday, they are for sure going to hike 25 basis points. So that's going to be all about their guidance going forward. And then the Bank of Japan on Friday, we're all going to be seeing what the new monetary policy is going to be. They have got inflation finally after like 20 something years in Japan. So we'll see how that goes. The interesting thing is how Bitcoin has diverged from the rest of the market. I'm really hoping that that means that Bitcoin outperforms if we get a pullback in stock indexes. Okay,